On the 1st of January 2026, one of the most visible transitions to the new tax system in Nigeria was observed. The transition from the Federal Inland Revenue Service to the Nigerian Revenue Service. And according to responses to frequently asked questions, this appears beyond the change in nomenclature. Following the transition and in response to fresh concerns, the House of Representatives released to Nigerians the certified true copies of the 4 Tax Reform Acts. The acts include the Nigerian Tax Act 2025, the Nigerian Tax Administration Act 2025, the National Revenue Service Establishment Act 2025, and the Joint Revenue Board Establishment Act 2025, intended to modernize revenue administration, improve compliance, and strengthen fiscal coordination. So what do the acts mean for Enugu State? The executive chairman of the Enugu State Internal Revenue Service in an earlier interview shared insights with AFIA TV. Take a look.
No need for anybody to exhibit any fear about the new tax law. The new tax law inculcated most of the existing tax laws, the provisions of the tax law. We are transited into the new tax law. Just few minor changes to rejig the way we think about tax and rejig our mindset about people and how development can be attracted through revenue. So these are just few things that we are introducing to the tax law. The old things are that when you are an employee and the burden of filing is entrusted in your employer, who have to file and also deduct and remit. Today, there's a dual responsibility. The entity where you work for will also have to do the filing, but with expanded responsibility on them, especially certain disclosures. Then you yourself now have a burden to do your filing personally, because there are some of your income that your employee is not aware. If you have built a property where you have some rental income, your employee is not aware of it. If you have some shares in the stock market, your employer is not aware of it. If you have some shares in the stock market and you have been earning some income there, your employer is not aware. If you have a social media handle that generates inflow into your account on a monthly basis, your employer is not aware. If you have side hustle that gives you income, your employer is also not aware. Therefore, the onus of filing now lies on you. Your employer will only file that which they pay you, and that's the information they have. So all the information about your income is only you that knows that. So you're supposed to file, and have to file diligently. No space for hidden information. Gone are the days where somebody can say, the government will not know. Government will know. We will have access. Government now have access to a whole lot of things. They have access to your phone. They know whom you call. They have access to your bank account. They know how much that enters your bank account. They have access to the geographic information system of state. They know how much property you have. So they have every information. Your kids go to school, and these schools are being registered. Some of them register for national exams. So they know you. So nobody should say government will not know. Government knows. So file diligently. Your employer will file. You will file. The employer files before 31st of January every year. You also have the onus of filing your own before 31st of March every year. So you have 90 days gap between today and the deadline for filing. And you know that failure to file is sanctionable in the law. So the onus and the responsibility is expanding in the new tax law. So please, don't say it is my employer that has the duty. You now have a duty to file.
So there's the confusion now. The tax number, is it NIN? Is it in T?
No, there's no confusion. It has been resolved. So one thing we should also avoid is some news, fake news. And those fake news sell fast because they sell fast and they make their money fast. Because they believe that when they sell a fake news, people buy into fake news very quickly, especially when the news is against government. People buy into it as speed as possible. But what we are saying now is that if you have your NIN, you already have a tax ID.
Okay.
So you don't need to bother yourself. You don't need to visit anywhere. If you have NIN, you have tax ID. So what we do is to retrieve it and give you. So you can retrieve yourself. You don't need to go anywhere. For the Gen Zs and the millennials, you don't need to go anywhere. What you need to do is just type tax ID, www.taxid.jrb.gov.ng. Enter your NIN, enter your first name, last name, and date of birth. Click submit, and you see your tax ID. Copy it, save it in your phone as your tax ID. Anywhere it is required in any transaction, provide it. So your tax ID as a person will be individual. It is, if you did, in fact, for all those who have NIN up to 31st December, which is yesterday, your tax ID will start with 25. Which means it was generated in year 2020.
This evening, we critically analyze the acts beyond the headlines. This is Enugu Kwenu. I am Nathalie Ukwu. Good evening. A very good evening to you and welcome to Enugu Kwenu on AFIA TV. Joining me this evening is AFIA TV political and economic correspondent Nnamdi Obanya. Thank you so much for joining me, Nnamdi.
Good to be here.
It's great that we engage the ESIRS chairman together, the executive chairman, but I want to start here.
Yeah.
What exactly has changed? There seems to be a lot of ambiguity as to, really stating the exact facts, but based on your understanding, what has changed between the former and what we're going to experience moving forward?
So I think, first of all, if you're not a seasoned tax professional, and even then you'll still be confused. But the main things that they did, the Nigerian Tax Act, Tax Administration Act, the Nigerian Revenue Service, and the Joint Revenue Board, in layman's terms, the Nigerian Tax Act is just new acts they are bringing in. Some new laws. The Nigerian Tax Administration Act is just some new ways they'll be overseeing how it's done. Then, of course, changing of FIRS to NRS is the establishment of the Nigerian Revenue Service. Then the Joint Revenue Board is simply just how they'll be, collecting money from different. So I think what happened is a lot of people just saw the news, just saw the Tax Act, and they're not able to marry it with the new things that are coming in. That's where the confusion is. I always say that the National Orientation Agency, Ministry of Information, those burdened with, enlightening the general public, failed woefully, failed miserably. It's not from very defensive social media posts and posts on NTA, where don't believe all the fake news, these tax, they don't want to take your money. That's not what it's about. The average Nigerian, and this is what I always try to say when I meet any government official, like I even said to Mr. Nnamdi himself as well. The average Nigerian has never filed a tax report, has never done any tax reporting, because usually what happens is you are doing payee.
Mm-hmm. So let's move into some of the tax acts now. We'll begin with the Joint Revenue Board of Nigeria Establishment Act, which essentially establishes the Joint Revenue Board, the Tax Appeal Tribunal, and the Office of the Tax Ombudsman for the harmonization, coordination, and settlement of disputes arising from revenue administration in Nigeria. So one thing I want to get straight. When they say the Joint Revenue Board, are they referring to what has empowered the NRS, or is that something different?
No, it's just part of what empowers the NRS is the establishment of the Nigerian Revenue Service.
All right.
There are 4 of them, and I think this is the 4th one. Well,
so what is meant by the Joint Revenue Board?
So this Joint Revenue Board now, as you've seen, like I remember I told you, is the different people that are using it to make money for government from you. that's just the layman's way. The ombudsman is usually like an independent arbiter, like somebody who's monitoring a standard. It's supposed to be an ombudsman is supposed to be like someone who is out like an internal regulator. Then of course you have the tax tribunals, the appeals. So this is basically how they are going to get money from you, whether it's through fines, to make sure that they get your money. or the money they say you owe. And of course, like every of the acts, each one comes with a level of confusion. The level of confusion in this one is that when the House of Assembly, this is now Honorable Dasuki, and the changes that have been reportedly, been put out, that while the government saying, no, we're not going to take your money, the alarm being raised is that there was an addition that, disregards judicial oversight. Normally, in order for any arm of the executive to work, there needs to be legal interpretation from the judiciary. And that comes in, and once they agree, a warrant is issued. So without a warrant, the executive cannot take action. So you hear of arrest warrants, subpoenas. Without a warrant, you need a search warrant, you need an arrest warrant. Even to garnish an account, you need to give a bank a warrant. So now, without that, people are worried that the government can just come and just take money. Then there's also the issue of, before you can file an appeal, if they say you owe the government 1 billion, and you say, no, I owe 10 million. You say, no, before you can appeal, you must first pay 20% of the 1 billion that they are saying you owe. So that's another confusion there.
These are the issues, but the issue for us today is understanding, really breaking down these acts. So I want us to start with who classifies as a taxable person. You're seeing that according to the Tax Administration Act, every taxable person is expected to obtain a taxpayer identification.
Yes.
So who classifies? Because you hear things like if you earn 800,000 or 840,000 and less than annually, then you're exempted if you earn less than that or that. Whereas this tax is supposed to be more glaring for those who earn a lot more than that, right? So if some people are exempted and the tax is only on the profits, right, and not on the capital, it's only on what has been gained, who exactly pays tax and what is the implication of the tax on the income?
So let's get something straight, Tax, the only time profit is taxed is corporate tax. That's where you tax profits. For individuals, your income is taxed.
In the new tax act?
No, normally as an individual, what is taxed is your income. It is companies that have corporate tax, we are dealing with corporate tax, that you tax profits.
So what is the reality on ground?
So,
right
this is still, to an extent, the same thing. What has changed is now we've gone for a very heavily progressive tax framework, which the more you make, the more you pay. Not just in amount, but in percentage, and the worry is that this would it will discourage.
Yes.
That word gives me trouble. It will discourage people from, making capital gains in business, from expanding, from trying to increase revenue share. It will make people start, dissolving businesses and spreading them out into smaller units so that overhead payments are very small. It will make people start, it's going to discourage. When you have progressive tax, what you're doing is you're going after top earners. And what top earners usually do is they go for tax avoidance, including even having money leave the nation, so that they don't have to pay tax. You start finding the biggest companies putting their head office in tax havens. So
essentially, if those who earn below this 800,000, they're about the threshold. So if those people are exempted, then who are those specifically that have to pay? I'm coming there.
I want to just clear up the misconception that there's just one tax. Because there's corporate tax, there's individual tax. They are two different things. How the tax deals with companies is different from how it deals with me and you. If you have Nathalie Ukwu Enterprises, or let's just call it Milliken Corporation, owned by you, but you're still Nathalie. Milliken Corporation will only pay after its expenses have been removed and there's a profit. You as Nathalie, anything you make as your income is taxable. Now, what the government is saying that for individuals now, once you're making anything below 800,000 annually, you're exempt from tax. Now, 800,000 annually, once you're making the minimum wage of 70,000, automatically you're disqualified. Because
so that means that many public servants are already exempted. Those minimum wage.
70 times 12 is 840.
Yes. So from that, because according to what the ESIRS
what they're saying is that they'll first calculate 800. So the 40 on top is where your tax deduction starts.
So it's very minimum for civil servants.
But why they keep saying that a lot of people will not pay at all is that as individuals, you have deductibles. So if you are doing like HMO, health insurance, all those kind of health insurance and payments like that, those things are deductible. Then you're also allowed 25%, I think, of your house rent to the tune of 500,000. So if you take those things away from your salary, so imagine you're making minimum wage of 70,000 and you're doing your HMO, you're paying about maybe 10K a month. That's another 120K. So that 120K taken away from the 40 on top, already you're tax exempt. So before you even do rent deduction.
All right.
So even if your salary gets
a lot more money,
if your salary even gets to 100,000, 120,000, 150,000, in fact, there's a very high possibility that by the time you take away rent deductions, HMO, health insurance, and things like that, from people earning as high as even 200,000 in some cases, you will not see that whole gap paying tax at all, because the problem is that if you don't file, you will pay. You'll be charged. So the problem is that this is where the trick is. People don't know they need to file.
Okay, so let's look at an organization like AFIA TV, because I want all of us in the Enugu to understand this once and for all. So we stop saying new tax act. What does the new tax act mean? Okay, so for an employee that earns 100,000 naira,
yes,
you calculate it by 12 months. That's about 1.2 million.
1.2 million,
1.2 million. I hope my math did not fail. 1.2 million.
Yes.
So for this employee, can you...
So he earns 100K a month, right?
100K.
Yes, 1.2 million, yes.
Okay, great. So categorically, how would such an employee file his or her tax report, and what is the calculation for the tax due? What is the tax due for such an employee?
Good.
Would the employee pay tax?
Fantastic. First of all, we also have to imagine that this person does not have any other source of income, that they don't make any money from anywhere else, because that's a different kettle of fish entirely. Because if you do, you have to do that in your filing calculation.
And that's what the chairman was speaking of.
Most times, most of us have not done it because the office does it.
Right.
The office deducts directly and does payee. So you never have to really worry about that. But if you're earning 100K a month, 1.2 million a year, now, even that your 100K a month is not your salary, your actual wage in it might be 80K. Because it depends on your salary breakdown. Not everything is raw wages. Some things are office allowances that they give you. Like in the media, if you check your salary, well, you see that some of it is wardrobe allowance, this allowance, but the main bulk will be your salary. So it's 80K that might be your actual salary. 20K might be transport allowance and other allowances. So if 80K is your real salary already, that's where the taxation starts from, your real wage, not the 100K.
How do they find out which is your real wage?
It's in your office will have a breakdown. Even though they tell you this, if you check your appointment letter, you will always see a breakdown of your actual wages. Then your payee at that level, 80 times 12.
That's pay as you earn.
Yes, so 80 times 12 now, we've gone down from 1.2 to 960,000 immediately. So now, at that 960,000, the first thing you will do is you take away the 800. It's remaining 160. Catch. You live in a one-bedroom apartment, you're paying 200K a year. You get 25% of 200K is about 50K. So from that 160K, you remove another 50. What is taxable is 110. But you have your annual money you're paying of 20,000 for your HMO. That goes again. So your actual tax now is 90K. So 90K is what they're going to tax you. And you're in the lowest bracket, which I think is about 15%. So your tax for the year will be 15% of 90,000. Now 10% of 9,000 is 9,000, 5% is 4,500. So you'll be paying around 13,500 naira. That will be your tax for the year. As somebody who is earning 100,000 naira, given the things I said. But now you have to file. I paid this my rent cost. This is what my rent cost. So this percent of it, I'm entitled to this, remove. I'm paying this HMO, with supporting documents. When you do that, you show this is my, your officers will start giving certified true copies of pay slip. So that when you now see pay slips become very important again. So that when you see the pay slip, you see transport allowance, wardrobe allowance, like now, your whole salary is not your wage, you know that, right? As a broadcaster, if you go and look at the letter, there's wardrobe allowance, this allowance, and those things are inside a pay package. But what is taxable is but they're always very careful, because if you now go and start cheating and you put that, somebody is earning that 100K and you want to say that 80K is wardrobe allowance, haba. Even the tax office. That's why sometimes now I hear that, and just so I don't mislead people, I hear that there are some allowances that they're not even allowing to be tax exempt anymore. But I am sure of the HMO, and I am sure of the percentage of your rent to the limit of 500,000. So you're earning 100,000, you pay like 13,500 a year.
Okay.
That will be your tax.
So essentially now, you talked about how it's not everything that you earn that the employer may know about. You might be doing a side business. Maybe you sell cake on the side, or maybe you sell drinks. So what's the responsibility of the employee who has to now take that personal tax decision?
So now, if on the side, let's say like you have Nathalie's milking cakes, and these milking cakes, Nathalie makes an income from it. If the company is registered with CAC, that's a taxable entity already.
What if the company is not registered with CAC?
Then it's illegal. That's illegal and should not be doing business. Right. So Nathalie's company is taxable, not Nathalie milking cakes.
All right.
Now, let's say Nathalie sells a cake for 20,000, but it costs Nathalie 10,000 to make a cake, and Nathalie makes 5 cakes a month. So that business gives Nathalie 100K a month, but Nathalie uses 50K to buy ingredients and everything for the cakes. So Nathalie makes 10,000 on each of the 5 cakes and makes 50K a month. Now, that 50K of Nathalie's business is not what's taxable, because what I've just calculated for you is your gross profits. Now, because Nathalie is her baker, let's say it's a one-woman business, you are your baker. Inside that 50K, you said you're going to pay yourself a salary of 20K. That's the income you're making. Now, the remaining 30K is the business's money. But there are some little things like the transport to go to the market, maybe to repair an electric mixer or some things. When you remove all those costs, you now have your actual net profits. Even the cost of the delivery guy that delivers the cakes in some cases, all those things are in there. So by the time all that goes, and Nathalie's paid her 20,000, what the company has left every month is 10,000. Mm-hmm. It is that 10,000 at the end of the year, it is 120,000. That's what is taxable by the government.
So now
it's so low.
That is highly significant.
It's a threshold. It's now a threshold drop. But it's a business, not an individual now. It is individuals that have the 800K. For a business, profit is profit. So that will be taxed. But now you, Nathalie, you got 20K from it. And at the end of the year, that 20K is going to be an extra 240,000, right? Let's say Nathalie is also the 100K person. So that 200K, that 240K a year, plus that 1.2 becomes Nathalie's total income of 1,440 naira.
Okay.
So when you now take away the 800, right, it now becomes 640,000 naira at the end of the year. Now that 640,000 naira, after I've taken away the 800, that 640 now is where Nathalie says, okay, this is my personal income. That 640, for the whole year, I was able to, 240, 1440, 800, yes. I was able to pay my rent. Oh, so that removes 50K from it. Again, my HMO, another one. Then what is left is what is now taxed. And the bracket is within. And because, again, it's still below 800, it's the lowest bracket.
All right. So is this going to see the emergence of what some may now describe in the future as tax agents? Because you're seeing people, we have to recall that there are people in the rural areas, there are people who need assistance when it comes to this. I probably would need assistance eventually. So would you see the emergence of tax agents who would help you compute a lot of these things? Because like I said, some people in the hinterlands will need help. You don't want a case where you're accused of non-compliance and you have to pay some serious sanctioned fees because you did not do the right thing. So are you going to see, is there going to be a boost in employment in that regard? Is this going to create fresh opportunities for employment?
I don't think increase of, treasury agents is a sign of a good economy. I think it's a sign of a rent-seeking economy. It's a sign of a criminal enterprise. When a company has too many tax agents, it has become a mafia shakedown.
Do you think this is going to cause more of that?
Yeah, it's going to cause a lot of issues, mainly because, one, the tax collector is depending only on the activity in your bank account. Now, they say, oh, make sure when you're transferring, like right now, if I'm transferring money between my accounts, I write transfer from one of my accounts to the other accounts. So they will know it's not a separate income or a new income. It's just me to me. But here are the issues that they've not addressed. Number one, if I'm sending money to my other account using USSD, there is no space for comments. Or if I take my card and tell a POS agent to transfer to my other account for me because I want to make a payment, there's no space for comment. You see, these are the things. Then I now at the end of the day say, oh, there's this amount. I say, no, it's me transferring my account. Oh, you didn't say it. Okay, before you appeal, first go and pay 20% of what we said. Of what we said you owe us. And this affects people's cash flow. This affects people's savings. This affects people's planning. So it's going to cause issues. For people in the rural area, it will be even worse. Many of them depend on these POS agents. Many of them depend on USSD because you're more likely to get normal GSM signal than you have to get internet signal to use the app.
Now, for some people who may try to, first and foremost, does this regime provide greater room for tax evasion, or does it close the loopholes? If someone decides that the person does not want to pay tax and the person decides to save in Forex, because Forex you can have like 20 million naira and it's just is smaller than when you have to do it in naira. So can someone decide to do that to evade tax? Does this new tax system account for possible dollarization of the economy?
Where is your account? Is it outside the country?
Maybe you decide not to save it in the bank.
So you want to change to naira and you want to use naira and buy dollar and save your...
Yes, something, or you decide to use naira and buy dollar and then you don't account
so that money that was in your account that you used to pay for the dollar, when it entered your bank, that's what the tax guy was looking at.
So are the tax people, do the tax people now have access to everybody's account information?
Yes,
Which
it's part of the problem.
Which of the acts empowers them to do that?
So it's still part of the Joint Revenue Board. That's part of the issues that Suki was talking about. Look, the tax people can, if they feel somebody's not paying tax, you can get a court order and all that. But now, without that, they can just... Let me see Nathalie's accounts and get all your details. I want this Nathalie to see on TV.
All the details tax? From who? If they want to...
The bank.
The Central Bank of Nigeria.
No, your bank. Your bank.
Isn't that invading on people's privacy?
It's part of the issue of the overreach that the House of Reps are complaining about. That normally, if I feel I must first serve you, and if you don't make details available, then I should go to a court and say, I met Nathalie, I believe Nathalie is lying to me, we are conducting an investigation. Then the judge will check the validity of my petition and then issue a warrant for the Revenue Board to check your account. But now they can just go and check it.
Judging by the system that we run in Nigeria, where we see complicity, even among security operatives, what kind of system are we creating when a tax official has access to what is in your account? Are we creating more room for informants? Are we creating more room for terrorism? Are we creating more room for people to be harassed in society?
The thing I worry about most is that if there is no check on who can look at what is in your account, and I'm not just trying to create unnecessary fears, we live in the Southeast, so maybe those outside here don't know what it's like, so we can tell them. Nobody opens their account balance in public, lest you become the victim of a sharp kidnapping to fleece you of that money. So the fact that somebody who may have accomplices in the underworld can be saying, like this guy get money, and because I'm a tax official, I can write to the bank and say, and your NIN is what is attached to your tax ID. So once I put in your NIN, all bank accounts attached to that NIN will come out. So I'm able to see all your savings, domiciliary, fixed deposit, share portfolio, everywhere you have any sort of liquid or semi-liquid savings.
What's the tax on savings? Is there tax on savings? Perhaps now people who have been saving for a long time, and this is another scenario I want to create. For people that have been saving for a very long time, with a new tax regime, are those savings going to be taxed?
No, so you cannot tax in January for something else. What is taxed is, like now, the new tax law is taking effect January 1st. The first thing they're going to tax is your January income, then your February income. That money you have been saving, unless you now start earning interest on it, and it is that interest that is taxed.
And what if there's no interest?
No, there's nothing they're taxing.
But they can still look into your account.
They can look into your account, but if you've had the money there for a while, they will see the inflow and when it came in, how it came in. So if you've had maybe, let's say you've had 50 million in your account and it's getting interest of 50,000 every month, it is that 50,000 a month that they can tax. Even if you've not used it, but it's with you, it's in your account. But that bulk money that is there was sitting there in the account. They can't tax it. It's there. You only tax on income. It's like you come to my shop and you want me to pay tax on things I'm selling that I've not yet sold. It's when I sell, I make money that you can tax. So this is the same thing. Nobody's going to tax you on savings because when you made the income, whatever you were taxed was taxed. And you can, make your savings. The issue I have is that almost all of us, and I mean including me especially, we've not done personal tax filing. And I think personal tax filing sensitization should have been the first thing. Yes. That should have been a national 6-month campaign
essentially,
at offices, universities.
Where this personal tax filing, is it looking brand new to many Nigerians now?
It is.
Why is it looking brand new? Is it not something that should have been effective?
No, because whether you're working in the private or public sector, your pay as you earn tax has always been handled by the government. And then if you're a company, the way tax has been collected has been sort of staggered. The FIRS and co have always dealt with the big companies, the semi-formal companies. They've always had like the revenue officers that go into markets and get what they can from traders and artisans. So there has never really been a solid structure. And while I applaud them trying to get a solid structure, I also feel that they are leaving it too much to people. It's almost as if people are being set up to fail. And then you look at the news coming out and the talk of people talking about, we've all done this for years, IMF and World Bank and European Union being very, very involved in setting the tax policy for African nations. So people are worried about capital flights and things like that.
So let's look at and one of the, shall we say, the tenets of the new Tax Act. Now, the state tax authorities, according to the Nigerian Tax Administration Act specifically, will be responsible for the administration of taxes on resident individuals in respect to, number one, the imposition of tax on income, profits, or gains. 2, ascertainment of profits on income. I want us to stop here for a second. Ascertainment of profits on income. How?
Yes. So any income you make, it's not every money you make that is like profit. I could dash you money. That's a gift. So what they're saying is that income to individuals is state level. Income to companies, VAT, is federal. Then federal still disburses a good chunk of it back to the states. But personal tax, me and you, the Nigerian Revenue Board does not have any business with us. Our business is the Enugu Internal Revenue Service.
So this point I'm taking now is actually for the tax authorities, of course.
Yes.
This is referring to state tax authorities.
Yes, states, that's us. What I'm saying is that anything concerning individual,
right?
Anything individual is state level.
Yes, it's state level. So now that's a great point as well. Ascertainment of accessible profits on income. What does this ascertainment mean?
I said to verify.
Verify.
To verify,
So what do they mean by accessible profits on income?
Remember, we're talking about savings,
right?
And we're talking about interest on it. Accessible profit means that you have the money. I can't tax you on money that is not in your hand. I can't tax you on something you've not earned. I can't tax you on something you've not received. I can't tax you on what I think you may earn. So their job is to make sure that you as an individual, anything you are getting, particularly if you are a person that maybe you don't have a company, but you are doing, apart from your job, you're doing side hustle, you're doing small things, petty trading here and there. Those little petty trading and things, usually you can make profit from it.
All right.
But it's not a registered business thing.
All right. Then we have ascertainment on total income, ascertainment of chargeable gains, and rate of tax. That's the point 6. Yeah. What does this mean?
The rate of tax is what we discussed earlier on. It's a progressive tax system. Right. It's just simply saying which tax bracket are we putting you in, which percentage are you paying. So what tax rate are you paying? So So it's the State Revenue Board that will look at Nnamdi and says, okay, this is what they earned this year. This is the total inflow they had. So when we remove the 800, this is where this person is going to be. This person is going to be. Are they in the 15, 18, 25% brackets? After we've taken away the 18, after we've taken away the percentage for rent, after we've taken away the health insurance and necessities like that, when that is taken, where do they fall? Which range are they within? So it is the State Revenue Board that determines the tax rate for you as an individual, which tax rate you pay, while the National Revenue Service will now determine for corporate bodies registered with the Corporate Affairs Commission. They will now determine what tax rates those companies pay based on calculating their net profits after removing their production costs and overhead costs.
Mm-hmm. So what exactly would you consider the powers of ESIRS under this new tax act? Do you think any new tax has been introduced? It's very important that we address that.
ESIRS remains what it has always done, which is monitoring revenue for Enugu State. And you know that taxation is just one means of revenue generation. There are other ways, there are other levies and ground rents that, the state collects. So the revenue service is not just tax. But with respect to tax, their job is to implement and enforce the new tax regime for individuals. So everything to do with individuals, what you earn, and the tax you pay as an individual is going to be directly for us in Enugu State Internal Revenue Service are the ones that are going to handle that. So when we are doing our tax filing and everything, to know our tax ID number is with the Enugu Internal Revenue Service. We have no business with the national as individual. It is the company that has business as national. All
right. So essentially now, when you look at ESIRS, not much is changing, and you just continue to go on to implement. More or less. So,
the difference now is that before we're just chilling and the office handles payee. Now you as an individual,
yeah, that's for you.
You have to be involved.
For the board, exactly.
You have to be involved.
Is the board going to see expanded functions beyond the individuals paying tax? The board itself.
Of course, because the new tax law has, I don't know if it's expanded functions. The expansion of functions will always be determined by the state government, right, whatever new revenue model they want to introduce. But with regards to the new tax laws, whatever extra powers the new tax law gives to the tax services,
right,
like the ability to choose agents, to collect money for them and all that, the State Revenue Service, with respect to individuals, enjoys any new power bestowed on them by the new tax act.
And it's great that you mentioned that as well, because according to the new tax act, power to authorize another tax authority to administer taxes within its jurisdiction on its behalf with the approval of the relevant government.
Yes.
So this sums up the point that you just made. So how would they be able to select the other tax authorities that can collect tax as well?
So in other revenues, they've been doing it already in different places. If you look at for example, the private companies that handle collection of levies in the market and all those things. Let's look at an example in Anambra, for example. You have a company like Bigley Oil that has been giving revenue collection at, in Anambra. So there's a fixed amount that they pay the government anymore. It's an open, that every month they did an open bidding process. So when they pay the money for the month, they go out and generate that revenue from the market. So the government can decide that, look, instead of us employing and making 10,000 new civil servants, Nnamdi, we are giving you Ogbete market. Your job is to make sure you collect revenue from here, and your revenue target every month is 200 million naira. How you do it is your business. So now, my job now is to go and get and say, okay, what do I do? Okay, I know this girl Goodness. She's a major tout in Ogbete. She has people. I'll call her. She'll call her people. When that happens, everybody now comes together, and I now split them in the market and say, hey, you take this line, take this line, take this line. And we start collecting money for the government. I'm a private guy, but I'm working under the endorsement of the government to collect money from each trader in the market. Mm-hmm. And when I take the money, it's not for Nnamdi, it's for the government. It's either the government gives me a commission or they tell me anything you make on top of that is your own. But you have a revenue target. So the government has the right to appoint me. And if you say you won't give me,
what do you do then?
Is as good as saying you will not give the state their money, because I'm acting in law of agency, in a normal law, is the state has declared me a legal agent of tax collection in law of agency. If you refuse to pay the revenue when I give you an invoice, you are telling the government you are refusing to pay tax.
So essentially,
and you are breaking the law.
FIRS, the Federal Inland Revenue Service, has transitioned to the Nigeria Revenue Service.
Yes.
Why not ESIRS transition into ERS? Why is it still an Inland Revenue Service when the big brother has changed name?
Well, the reason is this: the FIRS was created under an act, So the transition is because the laws around this have changed. So they want to do they are reshaping what it does. I think what scares me is the removal of the word federal. That's what worries me, because federal means that they are federating units, and each federating unit has its power, right? And this is more of like an overarching institution over all the smaller federating units. So an Enugu Internal Revenue Service, a Lagos Internal Revenue Service, all these things will be the federating units, revenue services or revenue boards. I just worry about the nomenclature changing to national.
Nigeria.
And change Nigeria. No, well, Nigeria national. I'm just saying, like, remove the word federation and you replace it with anything except republic.
Right.
And you have things like national, the country's name, or democratic. Immediately what you're looking at is a single unitary power. And this is what worries me again. And when I look at the way the new tax laws are, some of the overarching powers of the agency and the lack of oversight, it makes me a bit, worried. So Enugu does not have to change its name. It's an internal revenue service because it's within Enugu. It does not do anything outside Enugu. Mm-hmm. So it's not interested in revenue Enugu is making from outside Enugu. So it's just for Enugu.
It's just for Enugu. I think that, so now looking at, this question has come up as well, and it was building up towards the new year. People were asking, so then what's the difference? FIRS, NRS. So according to the FIRS website at the time, they answered the question, what are the core differences in mandate, scope, and structure between FIRS and NRS? Now the answer, the mandate. While FIRS focused primarily on tax administration, NRS has a broader mandate covering tax administration, non-tax revenues, digital compliance systems, and enhanced coordination across the revenue ecosystem in line with the applicable acts. In terms of scope, NRS integrates tax administration with data analytics, e-invoicing, third-party information reporting, and stronger interagency collaboration. For structure, NRS operates under an enhanced and service-oriented governance framework with clearer accountability and taxpayer protection mechanisms. How optimistic are you in these expanded functions, especially into the digital realm?
I think this answer is an example of propagandist word salad. They are saying a lot and exposing a lot without saying anything. I think it's ridiculous. The first thing, I'm worried about the name change. Usually you see that so that people cannot go back and use other laws to challenge things they are doing, because they'll tell you that was the FIRS. Legally, the NRS is a different entity. It becomes an issue of entity. So already, that is already hedging themselves. Then, talking about expanded, broader functions, it's not anything anybody wants to hear when you're talking about a tax agency, a revenue agency, say they are expanding their functions. That is bigger government. Bigger government always means a poorer society, whether we like it or not, because what you're doing is you're expanding the power, the scope, the reach of the government, which is never good.
Has been taxing the nation to prosperity.
I mean, with Churchill, I will always go back. You cannot tax a nation to prosperity. Trying to tax a nation to prosperity is like a man entering inside a bucket and using his hand to hold the handle and lift himself.
So let's look at further implications. Further implications. Now, there's a certain provision of one of the acts that states a person engaged in banking, insurance, stockbroking, or other financial services in Nigeria shall make the provision of a tax ID precondition for opening any account or operating an exiting account. That's correct. What does this mean? Essentially, providing a tax ID to a person engaged in banking, insurance, stockbroking, it means that most of these people are going to be asking us to provide our tax IDs.
So I think I'm talking about the people who are already, I don't think there's anything different. It's just that now, if you want to open an account or anything, very soon, tell us come to the bank and attach our tax IDs to our accounts.
And what are the implications of providing your tax ID? I mean, they have your NIN, and I say from your NIN you can get your tax ID. So why would they need you to file it?
The implication now is that once you have your tax ID and it's linked to all your bank accounts, once they want to get anything and they have your tax ID, every single account you have will open.
And that's what you're saying
every single share you have, every stock portfolio, everything is laid bare before the tax man.
How are they making it easier for the average Nigerian? And we know how things work in Nigeria. Even going to, register for JAMB, you want to register for WAEC, you want to register. It's such, you'll be lucky very soon the tear gas will be used. Everyone the tear gas.
Yeah.
So how are the tax authorities making it easier for Nigerians to do this seamlessly? Can I go on the NRS website and say, this is what I'm earning, this is what I have, this is what, do I have to go and stand in line?
Well, I mean, the Enugu State Revenue Service chairman said, just he gave the URL, said put your NIN there and see your tax ID.
And so we have the ID.
So I think the IDs already exist.
Right.
So it's just for you to know it. So already, without your consent, it's very possible that it's already attached to your account, because it's tagged to your NIN.
So how do I remit the tax? How do I not get frustrated? Many Nigerians wanted their name at the time of JAMB registration.
Now you are hitting the nail on the head. This is the problem I'm saying. We have never filed tax reports. Nobody knows what to do first. Is there a paper I go and print out? Is there an office I go to? Nobody knows. And this is where I say, in terms of contacting the people, it's almost as if they are setting all of us up to fail and suffer and pay fines. It's almost like there's a plan that for the first 6 months we should all be paying fines. And that's a major revenue plan to use, because they'll tell you ignorance is not excuse for disobeying the law. But if they can keep us in a position where we don't know, so that we can keep paying, then they are very okay. And, so that's what I worry about. Look, because me, I'm talking to you, I'm still trying to find out what is the first thing to do.
Yeah, well, exactly, because it's great. I'm just wondering, okay, so I have my NIN, I have my tax ID derived from there. I know I'm in Enugu and my number should have some 14 somewhere in it. Now I want to pay tax. So what do I do?
It's a good question.
Okay, that was a good question for the tax administrators. So let's talk about the administrators, the officials. What are the powers of the tax officials under this new tax act? How powerful have they become? They are too powerful.
It's not that they have any. Normally, they have the duties and the power and the authority of the taxman on a regular basis, which is to collect tax from people. But now there are some overarching and overreaching things. There are some things that they should not be able to do without, judicial permission, without warrants, without subpoenas, without filing summons. There are also modifications in the law they should not be allowed to make without oversight. Then they should be able at any point to be called by the National Assembly for oversight duties. All these things have been moved aside, which just makes them like a separate arm of the government on their own. They are judge, jury, executioner, lawmaker, law interpreter, and law enforcer. Right. So the tax, they are acting like a government on their own. And they are not answerable to anybody.
So they're going to enjoy this regime.
Which is not good for Nigeria.
Let's talk about the ordinary Enugu resident that is watching this, perhaps sitting somewhere at home or at a friend's place, or maybe you watching this at a restaurant. What does this new regime mean for this individual? What should he or she understand from this?
I think what you need to look at is, remember your side hustle. If you have a side hustle, that income is key. Go to the bank and ask. I think the banks are the best choice. Go and ask questions. Please, how do I pay my tax? Is there a portal? Is there anything? Because like I said, the federal and state levels have not, and the Ministry of Information, National Orientation Agency, state orientation agencies, everybody has failed in communicating to people. There has been no practical telling. This question you're asking, what does the common man do? Is the one question nobody in Abuja has asked. They keep throwing out these word salads, throwing out these...
Okay, So speaking of word salad, I like that. Now I feel like eating salad. Okay. So the Joint Revenue Board, the key function, the Joint Revenue Board Establishment Act 2025. I want to understand what it means for the coordination between the federal, state, and local government taxation. Is there anything like that?
Yes, there is.
Because I now know we have NRS. You've clarified it. There's an act itself that empowers NRS, and Joint Revenue Board is another altogether.
No, so the Joint Revenue Act, the Tax Administration Act, the Tax Act, and the National Revenue Service Act are all just acts added to Nigeria's tax framework. And let's say that we have something called the Nigerian Tax Framework. But the name of the body in charge of it, the changing of the name of the body, is one of the new things that was introduced.
Yes.
And some of the operations.
So what is a Joint Revenue Board?
It's just an act within the tax framework overseen by the National Revenue Service.
Okay.
That National Revenue Service Act is just the change of name.
Is it a link? Is the Joint Revenue Board a link?
No, it's just a set of functions. Okay. A set of functions like...
So it's just like it's nomenclature.
Yeah, it's just nomenclature.
Okay.
Yes.
Okay, so now how progressive, no pun intended, do you think this tax is? Should we be concerned? I know we've raised concerns on this program already, but in terms of our well-being as individuals, as in the Enugu, should we be worried about this? Are we going to get poorer as a result of this, or is it going to thrust us into prosperity?
And this is where the bad news comes. You see, in everything economics and politics, progressive is never a good term. So for taxation, progressive means more taxes as you make more. This means that in order to keep their businesses afloat, people are going to lay off people. People are going to cut down on some. And usually, if you want to maintain quality and maintain some things, what you cut down is staff. So people will lose jobs because taxes will be higher and businesses have directors and investors. They have profit margins. You can't tell somebody who's sold his whole inheritance of land to invest in a business to consider somebody else. He has his money he has to make back and take care of his own family. Then, so progressive tax method is not always a positive thing because there always has to be tax protection for the people that make money in the economy, which is the biggest businesses, the biggest earners, because they are the biggest suppliers of liquidity into the economy. Because, let me put it this way, if your salary is 100,000, you rent a place to stay, probably a one-bedroom, a small place, you stay there, take your transport to work, come home. If your salary is 10 million, you have a driver, you have a cook, you have a security man. These are salaries. You've created streams of income for people. All people are going to buy other things. You are a natural wealth distributor. So now imagine you work for a company that pays 10 people 10 million. That company's service to society is very important. And if you use taxation to reduce the profit margin and they have to start removing people, what you have is a situation where that flow, you don't have it in the economy again. It's not going direct to hand for people to make choices. The money is being taken to the government to do what they feel is best for you. Whereas more of the money should be circulating in the economy so that we buy the things we want to buy. We invest in what we want to invest. We save in what we want to save. If more of the money goes to the government, don't you have socialist policies? We're going to build school. We're going to build hospital. We're going to build road. And corruption will be rife because all the money is there.
So what is this conundrum, the controversy around the VAT, the value added? We hear that, value added tax, and people, they join conversations acting like they understand it. But essentially, many of you don't. They say VAT is going to explain to us.
VAT is just it's basically a sales tax. It's value added tax. It's basically a sales tax. It's the tax that me and you pay when we purchase some items. So what are the changes
now? Because it's the change that many people are not aware.
The changes people are, again, this is where there's a gap between what the assembly is saying and what the Gazette is saying. And so some of the things that were there, and it wasn't just VAT. It was also things like things that you buy, foreign currency issues, where there was a rumor that they were saying that no matter what currency you use, you must change to $1. There are some things that are not clear, but there's no real controversy with VAT. VAT is basically a sales tax, and it's basically a tax. What happens is basically a tax that all of us pay when you buy a bottle of beer VAT is on it.
Is as the new tax regime and increase the VAT?
No, VAT has not increased.
So it's still remaining.
It is a sharing formula.
So what's the sharing
that people
formula?
are?
Tell us. That's the nail. That's the nail on the head. So what's the sharing formula now between the federal and the state?
No, so the states take a lot of the VAT, but I think some states are complaining that they generate more VAT than some other states, and they are not getting a good share of the VAT. There are things that determine how much share of the VAT you get. It's just, again, it's like how much money it's like your accrued allocation account, funds from the federal government. How many people do you have? How large is your state? How big is your economy? These are the things that determine. People feel that the president was pushing a lot of VAT money to Lagos. You know, that too much VAT money.
When you say pushing VAT money to Lagos, how do you mean?
Lagos is making too much from VAT. But I mean, the amount of VAT generated in Lagos on one Friday night, just some people buying champagne in nightclubs.
So the VAT, for instance, how does it affect? Like, what I want you to explain.
So when the government collects VAT, they distribute to the states.
Right.
It's extra income for the states.
So the sharing formula from the federal to the states now
is where
they were pushing too much to Lagos.
Yes, they feel that too much of it is going to Lagos.
So who determines the sharing formula?
The federal government, the Accountant General Federation, because they sit down, like I said, there's criteria. Population size of the state, size of the economy. There are things, and how much VAT you generated. All these things come together, and then you get your VAT. So if you didn't generate too much VAT, but you have a large economy, you have a large population, you might get more than somebody who generated more VAT, but has a smaller economy. And then two, there's also a kind of, let's say, socialist mentality to it, where VAT is being given to help prop up some states that are not really making money. So you're making, because even in the Southeast, all the Southeast states, I think except Anambra, get far more than the share of VAT that they're responsible for. You know, I think in terms of VAT, Anambra is the most vibrant state in the Southeast. But I will say this so that people don't start getting carried away. One problem I have is that there's a poor information, poor statistics, and sometimes I think deliberate obfuscation of data, you know, that does not let people know the truth about purchase and VAT generation in the Southeast region. Data is something we are fighting. There are many of us that are fighting this thing. There's very poor data collation and data analysis in the Southeast, so you can't be too sure.
Time is up for this program, but I have to ask you this final question. Will the new tax regime bring more money to Enugu State, or is it going to dwindle fortunes in the long run?
There is no time a progressive tax system or anything with a socialist mindset. When you start saying tax the rich, when you think like that, you create poorer societies. A rich society is a society that has rich people, not a society that has a rich government. Any taxation policy that puts too much money in the government hands because they want to equalize society through government programs and equity. So we're going to tax the rich so we can what you have is corruption and poverty. If you really want to do it, you should have either you have a regressive tax system and drop your taxes really low, or you keep a flat tax system and have capital gains tax cuts so that people who are investing more in business get certain protections and certain tax discounts.
When you say regressive, you mean progressive?
Regressive.
Regressive, because the regressive will tax the lower income earner more.
Regressive means that the less you make, the higher your percentage. It sounds crazy, but when you're doing regressive taxing, you first take like a whole bunch of people. Remember the 800K thing?
Right.
Yeah, those people, you still exempt them. You still exempt them. It is just that now people at the top have more money in their hands. But why most people don't do is that it seems unfair. But there are times when it is necessary. What I am recommending is a flat-based tax system. If we're saying corporate tax is 30% and private tax is 10%, let's leave it at that. And then let us now say that for those making the most money at the top, if you make a certain amount, we'll add 5% on top. But if you are expanding your business, if you employ this amount of people, there are certain criteria we'll use to give you discounts, to encourage people to increase their business, to pay more salaries, because more salaries should be with people and businesses and in the private sector, not in the hands of government. That's how you build a proper, strong capitalist framework, and you don't have a socialist economy where you have government hospitals, government roads, government buildings, government this. If the private sector is not running the economy, then there's no difference from you and,
all right. So to briefly clarify, what is your main motivation for supporting a regressive narrative
No,
because
flat. It's flat.
okay, not to work, cancelling regressive.
No, I recommend the flat.
The flat tax. Okay,
Yes.
then it's a constant tax.
Yes.
So that comes. Okay. Thank you once again for your time, Nnamdi. I mean, this is a call to the NOA and, of course, to all of the authorities involved to now we understand the percentages, we understand the figures. Now, how about you tell us how to file these tax reports so that we stop the flamboyance and we stop the word salad, as Nnamdi said. Thank you once again, Nnamdi.
Always
so good to have you. All right, the Enugu Kwenu has come to an end this episode, and this is saying thank you for watching. We hope we have helped demystify the tax issues a little more. And we'll continue to have this conversation. Perhaps next time we'll have a tax official tell us how we can file these tax reports. Until we meet again, same time, same channel, next Wednesday, I remain Nathalie Ukwu. Have a lovely evening and happy tax paying 2026. Bye for now.